Welcome back to the Alex Carter Podcast. You know we love to go deep on some of the most interesting stories in business and tech, and today we're diving into one that's been making headlines. The huge comeback of Alibaba.
Yeah, Alibaba. This is a company that, well, let's just say, they've had a bit of a roller coaster ride over the past few years.
That's one way to put it. I mean, from record highs to regulatory crackdowns, leadership shakeups, and now this incredible surge in their stock price. You sent over some fascinating articles that really break down what's behind this rally, and we're talking a serious rally. Over $100 billion added to their market cap this year alone. So our mission today is to unpack all of this for you, figure out what's driving this remarkable turnaround.
Sounds like a plan. And just to give a little more context, those articles you shared highlight that Alibaba's U.S.-listed shares have jumped nearly 60% this year. That's after a pretty tough period where they faced intense scrutiny from regulators, tougher competition, and even internal challenges. So yeah, a $100 billion rally is pretty dramatic.
It's a massive swing. And the articles point to a few key factors we need to explore. One is their advancements in artificial intelligence. AI is absolutely everywhere these days. Then there's the return of Jack Ma, their co-founder, back into the public spotlight after keeping a pretty low profile for a while. And of course, we can't forget the internal shifts within Alibaba itself. They've restructured, changed leadership, and seem to be embracing a new strategic direction.
It's definitely a multifaceted story. And to really grasp the significance of this comeback, it's crucial to understand the context what Alibaba went through. Starting around late 2020, this wasn't just a random surge out of nowhere.
Right, it's not happening in a vacuum. The timeline, as I see it from these articles, starts with Jack Ma's speech back in October 2020. He made some pretty pointed comments that seemed to criticize China's financial regulators. And what's interesting is this happened right after Alibaba's share price hit an all-time high. Talk about bad timing.
It's almost unbelievable, right? I mean, at that point, Alibaba was at the top of its game. The undisputed leader in Chinese e-commerce, expanding globally, their cloud computing business was booming. Plus, they had Ant Group, another company co-founded by Ma, which is the giant behind Alipay, think that like China's PayPal. They were gearing up for what was supposed to be the biggest IPO in history, potentially raising over $34 billion. It felt like Alibaba was unstoppable.
It really did. And then, bam, just days before Ant Group's mega IPO was set to launch in Shanghai and Hong Kong, it gets abruptly canceled. The official reason from Ant: changes in China's regulatory environment. It sent shockwaves through the entire tech world.
Oh, absolutely. It was a huge deal. I mean, looking back, that cancellation really signaled the start of a period of much closer scrutiny, not just on Alibaba, but on almost every major tech company in China. Regulators started cracking down on practices they saw as anti-competitive, leading to some pretty hefty fines for companies like Alibaba. Ant Group had to go through major restructuring, and a whole wave of new regulations specifically targeting the tech sector came into effect.
So we're talking about a much stricter environment for these tech giants. But it wasn't just external pressure from regulators, right? The articles also talk about internal challenges Alibaba was facing around 2021. The global economy was still dealing with the fallout from the pandemic. There was this rising competition in their core e-commerce business from companies like Pinduoduo and even Douyin, which has a massive user base.
Yeah, you can't ignore those internal factors. Alibaba wasn't just dealing with regulators. They were facing a rapidly changing competitive landscape, especially in their bread-and-butter e-commerce business. And then in March 2023, they make this pretty radical move. They announced plans to split into 6 separate business groups. The article suggests the idea was to make each unit more agile and potentially even set them up for individual fundraising or public listings.
It was a bold move, almost like they were trying to unlock hidden value within this massive, sprawling company.
Exactly. The logic, as I understand it, was that smaller, more focused units could move faster and adapt more quickly in such a dynamic market. But here's where things get even more interesting. This restructuring was followed by some pretty significant leadership changes. In June 2023, Daniel Zhang, who'd been CEO since 2015 and chairman since 2019, steps down from both roles. He decides to focus on the cloud business. Then, out of the blue, just 3 months later, he abruptly resigns from the cloud unit completely. That kind of high-level turnover can really create uncertainty within a company.
It must have been a whirlwind for everyone at Alibaba. You shared an article where a former executive was quoted saying, "A great sense of uncertainty and confusion hovered over employees." And the articles mentioned that Eddie Wu, one of Alibaba's co-founders, then takes over as CEO and head of the cloud business, while another co-founder, Joe Tsai, becomes chairman. It definitely paints a picture of a company in transition, maybe even a bit of turmoil.
Definitely a period of significant internal shifts. And when you combine that with the ongoing external pressures from regulators and competitors, it's no surprise that some people were questioning Alibaba's future. So in that light, this current turnaround is even more impressive.
And the articles really emphasize that this positive momentum is largely due to a change in strategy under the new leadership of Wu and Tsai. So what exactly did they do differently?
Well, interestingly, it seems they decided to kind of course correct from some of the earlier decisions. Instead of going full steam ahead with 6 totally independent business units, Wu and Tsai steered Alibaba back towards its core strengths: e-commerce and cloud computing. They basically doubled down on what they do best and streamlined some of the other, maybe more experimental initiatives Alibaba had been exploring.
So back to basics, focusing on what made them successful in the first place. It's a classic strategy, especially when you're navigating a complex and challenging environment. And from what I'm seeing in the articles, they also made a big push into artificial intelligence.
AI became their top priority. Both Wu and Tsai stressed the importance of developing a startup mentality within Alibaba to drive innovation and speed up decision-making in this rapidly evolving field. Tsai even talked about how large companies can get bogged down by bureaucracy and slow approval processes, so they really wanted to create a culture where they could move faster and compete with smaller, more agile companies.
And part of that involves simplifying their internal communication, right?
Yeah.
The articles mentioned a focus on clarity and streamlining, really making sure everyone was aligned on those two core pillars, e-commerce and cloud.
Yeah, that was a key part of it. Sai specifically said that by communicating a clear, streamlined structure to employees, they'd be empowered to work more efficiently and make decisions faster. And there were also reports of a greater emphasis on giving younger leaders more autonomy, letting them take ownership and learn from experience. And perhaps most tellingly, they decided to put the brakes on the planned listing of their logistics arm, Kainao. That suggests they were really reassessing their strategic priorities.
So we're seeing a combination of things. A shift in focus back to their core businesses, some significant changes in leadership, a renewed emphasis on agility and empowering younger talent, and a very clear commitment to AI. But there's another piece of the puzzle that keeps popping up in these articles, and that's the Jack Ma factor. Why is his return to the public eye seen as such a big deal?
Well, after that Ant Group IPO was suspended back in 2020, Jack Ma basically went silent. He stepped back from public appearances and kept a very low profile. He almost became a symbol of that period of increased regulatory pressure on private businesses and entrepreneurs in China. It created a lot of uncertainty and made investors more cautious about the tech sector as a whole.
Right, because in China, the government's role and policies have a huge impact on pretty much every industry. So when Beijing seemed to be taking a stricter stance on tech companies, it naturally had a ripple effect on investor sentiment.
Exactly. But as China grapples with its own economic challenges, the importance of the tech sector for future growth and innovation has become more and more apparent. And that's where Jack Ma's reemergence becomes really significant. The articles point to an internal memo he sent out in November 2023, urging Alibaba to correct its course. A lot of people saw that as a sign he still believed in the company's future and a way to boost morale internally.
Makes sense. Hearing from the founder, especially during a time of change, can be a powerful motivator for employees. But it seems like his appearance at a pretty exclusive meeting with entrepreneurs, hosted by Chinese President Xi Jinping in February this year, had an even bigger impact.
That was a huge moment. Ma had been absent from such high-level public events for quite some time. But there he was, alongside other prominent Chinese CEOs and founders, meeting with President Xi. It was widely interpreted as a sign of renewed government support for private businesses and, very importantly, for the development of artificial intelligence. Some people even saw it as a signal that the regulatory environment might be easing up a bit, or at least that there was now a greater focus on fostering innovation.
And the article suggests this meeting actually had a concrete effect on Alibaba's willingness to make big investments.
For sure. Alibaba's chairman specifically mentioned that it gave them more confidence to reinvest their earnings into things like capital expenditure. They even announced a massive $50 billion commitment to building out their AI infrastructure over the next 3 years. And they're ramping up hiring in key areas. It shows they believe in their future growth prospects.
So that brings us to the other major driver of this stock rally: artificial intelligence. The articles make it clear that a lot of the excitement around Alibaba is tied to their advancements in AI, especially the buzz surrounding DeepSeek and their own AI initiatives.
Yeah, the AI factor is huge. It's really fascinating to see how the narrative around Chinese AI development has evolved. That research paper from DeepSeek, it got everyone's attention. It suggested that Chinese researchers were making some serious progress, maybe even using more efficient and less resource-intensive approaches. It created a lot of positive sentiment around the potential of AI innovation coming out of China.
And Alibaba wasn't exactly a newcomer to this field, were they? The articles talk about the launch of Tangi Qianwen, or Qian, in 2023, which was right on the heels of the whole ChatGPT frenzy.
Right, Alibaba was an early mover in the large language model space. But what's interesting is their strategy. They've been really aggressive about releasing a ton of open source AI models. We're talking models for video, text, image generation, you name it. And this open source approach, making their AI models freely available, that's pretty unique.
Open source means anyone can use these models, build on them, adapt them for their own projects, right? So the question is, how does Alibaba actually make money from this if they're giving away their technology?
That's the clever part. The articles highlight that the real payoff for Alibaba is in their cloud computing business. By making their AI models open source, they're encouraging a whole ecosystem of developers and companies to experiment with AI and build AI-powered applications. And guess what? All those applications, no matter which AI model they're using, they need massive computing power to run. That's where Alibaba Cloud comes in. They provide the servers, the infrastructure, the computing muscle that these developers and companies need, and they charge for those services.
So it's like a classic razor and blades model. Give away the razor of the AI model for free, and then make money from selling the blades, the cloud computing power.
Exactly. It's a really smart strategy. And it seems to be working. The articles mention that Alibaba's cloud computing business saw accelerated growth in the December quarter. Plus, we're seeing Qwen-based models gaining popularity on platforms like Hugging Face, which is a major hub for AI models. That suggests they're performing well and getting adopted by the developer community.
It's a whole new way of looking at Alibaba. Instead of being seen as a primarily e-commerce company facing growing competition, they're now being positioned as a major player in cloud computing and, even more importantly, artificial intelligence, two of the fastest growing areas in tech right now.
It's a total shift in the narrative. They've gone from being perceived as this maybe maturing e-commerce giant to being seen as a leader in cloud and AI with a ton of new growth opportunities ahead of them.
So let's sum it all up for you. This incredible $100 billion rally in Alibaba's stock, it's not just a fluke. It's the result of a powerful combination of factors: a major internal restructuring, a renewed focus on their core businesses of e-commerce and cloud computing, some impressive advancements and strategic decisions in AI, and a shift in the broader political and economic landscape, which is perhaps best symbolized by Jack Ma's return to the public eye.
It's really amazing how the story of a major company can change so dramatically in such a short period. It just goes to show the resilience and adaptability of a company like Alibaba. But it also highlights the incredible impact of emerging technologies like AI and how much influence broader economic and political forces can have on the business world.
I hope this has given you a better understanding of what's driving Alibaba's recent success. It certainly raises some intriguing questions about the future of Chinese tech and the global race in artificial intelligence. Thanks for joining us for this deep dive. We'll catch you next time on the Alex Carter Podcast.